Assalamu alaikum everyone, welcome back to another video. I hope you're having a good day. One of the things that you should know about me, and one of the things that if you have been watching my videos you probably know already, is the fact that I absolutely love getting paid dividends. And the reason for that is passive. Okay, the fact that you just buy stock, you hold it for a period of time and they pay you is really as simple as that. And right now, when you look around in the stock market, the news and everything is doom and gloom. Everybody's telling you, you should sell or selling their stocks, and everything is a negative. And people are saying, oh, we might not even see any returns in the next 5 years, 10 years. And what I've realized is, by listening to all of this, it kind of brings you down and you think, do you know what? I might as well just sell it while I'm ahead. Because right now, if you can see my portfolio, I'm still up on the list at 1,400, right? So you get tempted at times, and people are like, oh man, you should sell it because it's everything is down, like while you're still up, just sell it, take your money and buy something else with it, whatever. Like, it's a lot of money. I don't listen to them, because in the end of the day, the facts are there are companies out there that have been paying dividends for a long time, and the companies that have increased their dividend during recessions. If we are in a recession right now, then that means the companies that I'm going to talk to you today, okay, the companies that I'm going to show you today are 6 different companies that have increased their dividend in the just last few weeks. If we are in a recession and there is doom and gloom, why are these companies increasing their dividends? Maybe we're in a recession, but maybe it doesn't impact their business. Okay, maybe it's not impacting as much. Okay, but because they are still, increasing their dividends. So that's the one thing I want to look at today. 6 different companies that have increased their dividend recently. If you like this kind of content and you like the transparency that based on what I've been sharing and everything, please give the video a like, because it really helps the channel. Okay, what you see right now is my actual portfolio, £56,651. And right now, in the last few weeks, it's down quite a bit. It was at one point, I think it was £61,000. I've been adding money to it. And last week, I think we almost hit a red. Okay, I think we were down. Basically, we had about 200 something or whatever pounds in profit. And then it went back up on last Thursday. And then Friday, it went back down again. So it is up and down. But right now, what I'm doing is I'm still adding money to the portfolio. I'm still buying more stocks. I already add 250 for next week. I will possibly be buying more stocks next week as well if everything carries on basically going down, especially because of the earnings reports that's happening next week. What we might end up seeing is the fact that for example, if the Bank of America comes in and then says something bad, or basically a doom and gloom, whatever, then we might see a lot of these companies basically going down because of the sentiment. Everything is down right now. For that reason, I think we might have another down week. And if that happens, it's a good opportunity for me to look around and say, okay, what else can I actually invest in? So companies like Rio Tinto are actually reporting their earnings on Monday after close. Before close, J&J are reporting, and a couple of other companies. Okay, I'm just going to mention those ones that I own in my portfolio. So Netflix, obviously, it's reporting as well. And it's a good indicator, again, to see what might happen for the rest of the week. ASML is reporting, PG is reporting, Tesla is reporting, and a couple of other companies. And then on Thursday, none of the companies I own actually are reporting, but there are a couple of other companies reporting, and then Thursday as well. So it is not the best. It's not the Apples and Microsoft that are reporting yet. But by the time we get to those, we might be down another 2-3, if not more than that, before we get to the end of next week. So we will see. So whatever happens, I'm buying dividend stocks as usual. And like I said, today I'm going to share with you 5 different companies that have increased their dividend in just the last few weeks. And like I've always said to you, these companies do not increase that dividends if they feel like basically their business is not growing, or something in the horizon basically is going to ruin their business or whatever. These companies have actually, some of them have paid this dividend and increased this dividend for a very long time. So we added how long basically they have been increasing, and the rest of the information here basically is still the same as what we used to using. Okay, so the first company we look at is Texas Instrument Incorporated. This is a technology company. This is a semiconductor company. They have basically analog devices. They have a wide economic moat, $148 per share, 3.34% dividend yield. The latest dividend increase is 7.8%, and that is huge. 7.8% in just basically this last few weeks. Now that doesn't beat inflation, but it's better than, obviously, imagine if you had quite a bit of money invested and you basically getting 7.8 on top of what you already had. I mean, in terms of dividend wise, they are increasing. Basically you were getting whatever you were getting before, you're getting now 7.8 on top of that. It's absolutely huge. And to be honest with you, one of the things that I like is just the fact that what is going on in the market is basically not affecting this company, and they think their business model is actually good enough to sustain and carry on. That's what I'm getting from this company. Okay, if they were cutting their dividend, then I would be worried, but the fact that they're increasing, that tells me they are not worried about what might happen in next year or so. They are happy to increase that dividend. Okay, and that's basically what I want you to understand from this. It's not because they just increased 7.8. It's the fact that yes, they have increased it, but that means this company has a great business that could sustain during basically could be all right during recession times. And the 5-year growth rate is 21%, which is very, very high. Payout ratio 48, 18 years of increase in that dividend. Safety 90%, profit margin 43, almost 44%. Free cash flow $5.8 billion, and that's probably a lot to do with the fact that they've got that much money in the bank, so that's why they're probably increasing. And 20% total return in the last 10 years. Growth is just 10% in the next 10 years every single year. I should say just because it's a technology company and it's been around for a long time, so it's very difficult for this type of company to grow, but 10% is really good. Fairly valued at the moment, and $166 per share. That's where the price should be. Next company is Starbucks. This is a company that is very well known all around the world. It has wide economic moat, $86 per share right now, 2.45% dividend yield. Okay, and then you're getting about over 8%. They have increased it basically over 8%, which is huge if you think about it. And the 5-year growth rate is 17%. So this is definitely a dividend growth stock. 62% payout ratio, just slightly higher than I would like. Dividends growth streaks of 11 years, safety 67%, and profit margin of 13. Free cash flow here, we're looking at about $3 billion, total return 15 in the last 10 years, and next year, basically 5 years, they're expecting about 7% of earnings growth. Right now it's discounted about 17%, $104 per share, where it should be. Right now is $86 per share. The next company we're looking at is Accenture, or Information Technology. This is one of the consultant companies out there. It has a wide economic moat, $252 per share, dividend yield of 1.77, and they have increased that dividend 15% in the last few weeks. 10% 5-year growth rate, payout ratio 37, and 17 years of increase in that dividend. Safety 92%, 11% of profit margin. Free cash flow $8.8 billion. Total return in the last 10 years, we're looking at 15%. Growth, we're looking at about 13% in the next 5 years. And then fairly valued right now, $258 per share is where it should be, right? Right now it's 252. So it's still a little bit expensive, I would say. So if you were interested in this kind of company, you've done your research, I'll probably will say just wait maybe until 230s or 240s. And it's definitely, based on what I've seen in the stock market, I'm sure that's a possibility right now. But yeah, 15% growth in the latest dividend hikes. Next company we're looking at, Illinois Tools Work. This is one of the oldest companies out there. It's industrial. It has a narrow economic moat, $186 per share, 2.82% dividend yield, and they have increased the dividend 7.4%, which is huge if you think about it for a company this old. Okay, 5-year growth rate 14%, payout ratio 58, and then dividend streak basically of 50 years. So they are a dividend king. They have increased this dividend for 50 years. Dividend safety, we're looking at about 81%. Profit margin 17.4. Free cash flow 1.9. Total return in the last 10 years was 14. Okay, growth estimate next 5 years is 4%. Like I said, it's a huge company, so it's not that easy for this type of company, especially in the industrial, to grow that fast. Fairly valued at the moment, $205 per share. Currently trading $186 per share. Next company is a company that you all know, and I talk about this a lot. Right now, Microsoft is actually trading $228 per share, dividend yield of 1.19, and they have increased to almost 10%. Just the latest increases. Okay, 10% growth rate for 5-year growth rate of 10%. Payout ratio 27. 12 years of increasing. 99% dividend safety. Profit margin almost at 37. $65 billion in the bank. 24% total return in the last 10 years, and 15 years expectation is basically 15% growth every single year in the next 5 years. 33% discounted right now. $352 per share is where it should be. Another company that has increased the dividends is A.O. Smith Corporation, industrial company. It has a wide economic moat, $49 per share, 2.45% of dividend yield. They've increased it again 7%. So look at how amazing this is. Every single company here either increases 7% or more. 5-year growth rate of 17%, which is absolutely huge. This is definitely a dividend growth stock. Payout ratio only 34%. Dividend streaks 28 years, and safety we're talking about 99%. 13% profit margin. 428 million in the bank. Total return 15%. Growth estimate is 8% in the next 5 years. Discounted 24% right now. $64 per share is basically where it should be right now. And right now we're looking about almost about $50 per share. So there you have it. 5 different companies have increased their dividend despite the basic what's going on in the market. If you were to, for example, purchase any of these companies and you hold it for say 5 to 10 years, you genuinely wouldn't care what's happening today. When you look back 5 years from now and you're still getting paid dividends that are increasing every single year, either 5%, 10%, whatever it is. If you look at the last 5 years, these companies have increased, okay, 21%, 17%, 10%, 14%, 10%, 17%. That's absolutely huge. So that you get in those increases as well. Obviously, every single month you get paid, and the next month they increase it, you get more money. Then you reinvest that money gives you more, and that's how the compounding effect starts. And this is what I'm trying to teach you guys here and talk about here as much. Not even so much teaching, so talk about as much as I can. That effect that dividend have. Like when you buy dividend stocks and you reinvest that money, okay, every single month, every penny that you reinvest also basically buys you more stocks. Those stocks give you more money, and that's how you start. And the bigger the portfolio, the more money you will receive, and the more money you will make in the long run, inshallah. Okay. So you just have to think logically, okay, if these companies have been paying this much for a very long time, the possibility is they will carry on doing that, okay? Unless it's a terrible company and they don't have any earnings or whatever. These companies will not have increased their dividend if they knew, okay, the business will be going down in the next couple of years. They would have cut the whole dividend and probably released a lot of their employees, for example. Why? Because they want to cut costs. That's what companies do. Okay, Starbucks would have shut down, 20, 30 different stores and get rid of everybody, cut the dividends, okay? Basically, don't buy back any shares, issue more shares to get more. So that's what they would be doing. But these companies do the opposite of what I just said. So you really need to focus on the long run. And when you talk about dividends, when you're talking about how much money you can make, that's what's important. And this is what I look every month. I'm looking at this. I'm thinking, do you know what? By buying more of these companies that I own already in my portfolio, hopefully will actually keep generating. Hopefully I'm looking forward to the day where I can actually say, you know what, my predicted income for the next month is about 1,000. And that's hopefully not too long. I'm going to keep doing what I'm doing, but I'm going to make sure every single month I invest, Okay, as you've seen already, every single month, a week, I add £250. Some months actually do more. As you can see here, I've already invested basically 10,000, closer to 10, over £10,000. Sorry, okay, so closer to £10,000, and I've almost got another basically 10,000, almost £300 to go before the April. So that's my plan, to max this account, and I'm definitely sure by the end of this year I would have actually put more money in basically in this account than's probably here what's basically required. So anyway, that's what I want to share with you guys. So just think about your long-term plan and just don't listen to the noise. Just if you see your companies are basically selling this week, look into it. Company that I'm looking forward to, their one of the companies I'm basically looking forward to their earnings is basically Procter & Gamble. I want to see what they say. I want to see what J&J says, especially about the spin-off. Okay, so I want to see those two companies and what they say. There are a couple of other companies on my watch list I'm looking forward to. Even Rio Tinto, I want to see what they say because I've been buying recently and I want to see what they say. So I've now got 25 shares. I would like to at least to have a closer to 50 shares of this company while I still feel like it's undervalued, because right now looking at it year to date, it's only down about 7%. So because of iron ore is actually prices is down a little bit, that's probably what's going on. It's a very cyclical business, okay? It goes up and down, but the most important thing for me is that I want to see what they say in terms of the future, in terms of dividends, in terms of so on, all of these things. So anyway, I don't want to make the video any longer than it needs to be, but like I've always said to you guys, think about the long-term plan. InshaAllah, just invest in companies that you believe in, companies that you know their business and so on, and obviously are Sharia compliant and so on. Have a wonderful day. Assalamu alaikum.